Hello, everyone. Let's dive into my Bitcoin Elliott Wave analysis here and then dive into some lower time frame confluence levels for potential buy opportunities. Bitcoin here obviously is in a 1, 2, 3, 4, 5 wave structure here after the fourth wave of 97K complete, and we're kind of waiting for this transition to end and have a terminal phase so we can get the next real move on Bitcoin. It's taking its time, obviously, and there's a lot of chop on the chart. So what we have to work with here on a Elliott Wave perspective is still kind of the same as we've had the last 2 weeks, and we've had a more structure develop here. But obviously, when you look at this, there's nothing really. It's still overlapping. But what we can kind of start to dissect in sort of a Elliott Wave way. So if we have an A, B, C, D, E structure here, we can form that this was a triangle, which is very standard for a wave 4 or wave 2, right? So you have some sort of triangle that you consolidated and formed into can be a terminal wave for Bitcoin. Typically on a C to D wave, you look for the 618 backtest on the E wave to short into the fifth wave, but we obviously didn't get that. This is a trending bear market, so there's not a lot of sometimes when you're patient, you don't get paid, right? But that's just the name of the game. So from this assumption of a wave 4, we can start to dive into a lower time frame zone and see that maybe we actually have some sort of Elliott wave structure, impulsive wave for that local 4 to 5, right? So if we look at a triangle fourth, here's one example that I've been looking at here. You can start to assume that this is an impulsive wave down, and then you've had some sort of confluence in these levels. So you could say this is a 1, 2, 3, 4, 5. You're putting in the wave 1 here and looking for a more of a flat on this 2, right? And then you start to structure down into more of an Elliott wave, impulsive 5-wave motive sequence into the fifth of the A around the 55K zone. That's one way to kind of look at this, and this is an example to be looking for. I think it's still early, and you still have less to work with here. There's another account on that same type of perspective that the second wave is already in. We're putting in the 3 to the 4, so this is the third wave that we could be seeing. However, price would really need to start to speed up and see some sort of distinguished impulsive longer wave 3 for this to be a valid count here. And right now it's still kind of overlapping and choppy, and it's got that corrective structure to it. So that's the second Elliott wave count that we can be looking at, and then the third one is obviously still the 335 or a 333. So in terms of a WXYZ that we could be looking at, again, price moving in threes. We could be assuming 1, 2, 3, 1, 2, 3. So this is just an ABC sequence into a larger ABC sequence, and with price still not taking out the low here and not showing a clear distinctive impulsive motive sequence 5-wave structure down for the fifth wave, you can still assume that we could still be in a larger WXY, and that's essentially why I've taken a long position, and the only long I've attempted in this entire range down here closer to the low here, so I can essentially try to capture on the X to the Y wave up into some higher time frame confluence zones for a short down into a clear, if this is the ABC, or we get a typically, so there's 2 ways you can really look at this from a WXY perspective. This is a larger WXY. You can get it at 1, 2, 3. So there's your 3, 1, 2, 3. There's your 3. So that's a 3, 3. And then there's 2 outcomes out of that 3, 3. You can get a 3, 3, 5 or a 3, 3. So you can look for a motive wave sequence, right? And we really better start to produce that. Maybe we are going to start seeing that here, and that would be a 5-wave structure, or we just continue to see an ABC, and then so that would be your 3, 3, 5 or a 3, 3, 3, and that's kind of what you're looking for, essentially why I've taken a long down here, and really probably the only long I'm going to be taking. I think overall this is an area for me personally that I'd like to try to attempt. I'm totally comfortable and happy if I get stopped out because the overall larger picture still remains lower here at these lower time frame levels, and we can go into those levels here in a second. But as I've said before, the overall higher confluence and more maximum profit area is going to be sitting down here, right? This is really the bread and butter of it. Let me see. I have my here, right? So the 618 and the 66 golden pocket here lines up perfectly within the wave 5 of the 5 to the A, and that would be your maximum buy opportunity. And if we just zoom out a little bit, you can kind of clearly see that within the overall phase that we've had, the 1 2 3 into the 1 2 3 4 5, then you're really clearly getting a golden pocket back test or retest into this zone with a clear 5-wave structure down, which is a very promising attempt to try to trade into a B wave and try to get a very high yield percentage on that swing trade, spot trade, however you're trading this. So again, that's why, one, I'm happy to get stopped out on this long, because I would be looking for this area and just maybe take a low leverage swing trade into that in DCA and play an average play. Or if we actually start to get a clear wave structure, 1 2 3 4 5 into it, then we'll have a really more essentially a beneficial entry trigger, right? Because you have lower time frame confluence. And let's say we start to get something like this. Your wave 5 should start to kind of trend into a diagonal, a triangle, or some sort of easily spottable exhaustion pattern, 3 drives, something like that, right? And with order flow confirmation, you can kind of achieve that. So when we kind of talk about like what's actually down there, so if you pull up the levels and the MPOCs, and this is the 60K low, there's a lot of attractive confluence in this. There's a daily, monthly, weekly naked point of controls in this level. It's a high spread, and remember, this is the the 618 and the 66 zones. So this is a high liquidity pocket. It's a good area for a potential bounce and a higher bounce, retrace back up to, preferably back up to the 100K zone, which is where the 618 would be from the all-time high, right? So you have the all-time high. Let me see here. I'll show you this. You have the all-time high pocket from, we can just assume a pull from where we're at right now. But if we go into the daily, for example, and try to trade up into that B wave, so the idea is getting a swing trade into here. You have the all-time high here, and you could be looking for wherever the low is, you pull that 618. So essentially, you'd be looking for opportunity here to trade back up into here, which puts us around 100K back up to the 61866, taking out the liquidity here and here. So essentially, again, let's just say from the median of this range up into the 66, I mean, that's an 83% gain. That's the overall idea of the swing trade and the, the benefits for looking at risk down here. So where does that leave us? Again, there's high confluence levels here. So if we start to come into something like this, then we can start to see, okay, we've had a clear 5-wave structure down. We look for the 5th wave. We start to settle into a swing position, and we manage our risk accordingly. So that's really my idea and why I'm okay with getting stopped out here. Again, it's only 2% risk, so it shouldn't hurt my portfolio at all if I do get stopped out. But on the upside chance that we somehow actually are still in a corrective, we get the WXY. Okay, well then I have exposure in a long here, and I can capture on this move up while still waiting for this move here. Again, it's just kind of my personal plan and how I've played this out. What we currently have here on the 1 hour, right? So we've got a daily. I mean, really, there's no levels in here. We're not really inside value. We've created a value now by trending within this zone. If we can do just a small value area pull within this level here, you can see that we're clearly below the value of this zone here. So nothing really to work with on that level. In terms of the monthly volume profile, right? So you have the monthly opens. So let's just get our opens and get rid of these. Let's just get rid of this level here. So we have the monthly open again. This is the value area high, the low, the POC. We're currently trying to reclaim the value area low of the monthly, which is a good sign because we could get a potential rotation back up. And if we look at the weekly profile, we've had the weekly open up here, and we've had a impulsive move down, but not a clear motive structure. So again, going back to the larger WXY and the attempt to, snag along down here. So bounced off the daily, the only daily level here since the, until the 60K lows. So we actually are above the weekly POC, but in terms of a full rotation down, we could simply get a rotation into here. And honestly, I mean, we could be also in a diagonal here as well. So something similar, you can kind of see that we're not taking out highs or producing significantly, different levels in terms of like, this is a lower low, lower high, lower low. This could just be another lower low, and even not even taking out this zone here. So, we tapped the daily open, and now we've rejected, and now we're losing the weekly VWAP, and you stack the monthly value profile on this, where we at here. It's really the only level you could be working with here. You could pull the daily profile in this market here, so you could be, looking at this set of zone here, or you could be trying a 618 back test for a high or low, which sits around the weekly POC and the daily POC. And again, my personal buy from this average here is 63,429. So I've currently put my stops at break even. I might leave those there. So in the event that we come down and we take this and we come into this confluence, maybe I'll retry that long attempt at no failure of loss, right? And then I try putting my stops here. That's just one setup. Otherwise, I think the more attractive setup is, again, you have an A, B, C, D, E, and you try to trade the higher low, the lower high confluence sweep of this, and just do a reclaim of the low here, because you do have a significant amount of liquidity down there. So in terms of confluence, that's really all we have to work with here. Let me see here. There's one other thing I wanted to walk you through. The cycle profile, again, going back to the loss of 60K lows, you have a larger profile pull of previous bull runs, and the data that you have to work with within here. This sits within the confluence of the levels that I mentioned earlier. So you have a potential idea that you're forming a fifth wave here, and you can come down and you're treating this POC as a magnet into this zone, and you'd preferably love to see something like that. When you start to stack on your levels, you have a lot of confluence right at that POC, right? So you have again, all your monthlies, weeklies, dailies within that level and that zone, and that'd be a good range to be looking at. And again, you have that golden pocket. A failure of those levels here, and we continue to trend lower, I think Bitcoin's in trouble, and you'd be seeing a lot lower, and I'd be looking at, honestly, the value area low of this range, and I probably wouldn't be taking any trades until we see low 30s. I'd probably still be trying to look to play the shorts, but me personally, I like to short the rises, not continuation shorts. Those are less likely, in my opinion, to perform. So you do have this level here to work with as well. You can stack the monthly and the level confluence on there. I don't think that's going to be your best friend in this sense, but really there's not a whole lot to work here. There's not a lot of value, and price is trying to find value. So if we are starting to move out of this current range value into lower value, we should start to see some sort of trend formation occur here over the next 48, 72 hours, right? So that's kind of what I want to walk you through today, and what I'm looking for next. So overall, I think it's best to just be a little bit more patient in this area. I wouldn't be trying to just continue to settle in trades, right? Because if we are going to have a way better opportunity down here, there's no point in trying to settle into long after long after long and longing the whole move down when you know that there's a big liquidity pocket here, and that's probably a magnet for Bitcoin. So in terms of Elliott Wave, again, as I mentioned, you'll get a clear picture here soon of what the overall play is, whether it's the 4 to the 5, there's a triangle, we're in a WXY. It really just depends, and I think, I hate to say it, but this is just transitionary. And until it actually starts to present itself, I think it's really best as a swing trader, and really anybody who doesn't have a good grasp on the market, to just sit on your hands, not try to do too many long attempts or short attempts, or however you're playing this. It's best to let it resolve, because the real big play is right around the corner, and you want to preserve your capital for that. So hope you guys enjoyed, and I hope you have a great day. Cheers.